All right, just a quick video on Copart. This is one of the ones I started buying recently. Very small position currently, but I'm going to add to it little by little. It's one I've had my eye on for a few years, and it's always seemed pricey, but now price seems reasonable. So as I've said before, this isn't a recommendation to buy or sell. It's just me walking through my process. But whenever I look at something, I compare it to the default option, which is the S&P 500, which is currently trading at about 30 times earnings and is kind of high versus the historical price, which is usually around 15 times earnings on average. And Copart is trading at about 23 times earnings. So 23 versus 30. And if you were to ask me, is this a better company or worse company than most of the companies in the S&P 500? I would say it's better. So if you were to have bought it when it went public in the 1990s, you would have had a 27,000% return. So it's an incredible run for this company. And it's been over 60, 63.85 was the high, but it's come down to 38.80 where it is now. So what do they do and why is it down? Well, if you want to know everything about the company, you can read the book Junk to Gold that was written by the founder. And this company basically rolls up junkyards. So junkyards were mostly independently operated, and this company got into the business of buying up these mom and pop junkyards and putting all the stuff online so people can buy parts and things like that. And rather than going to the junkyard if you need a part and looking for it and walking around, you can find it online. So technology was a big part of their story. And when you get into a car accident, if your car is totaled, they will sell it to Copart, and Copart will auction it off, and then other people will buy it. So, if you have a car and it was totaled, the body might be totaled, but, the engine and the transmission are valuable. The catalytic converter, if it was hit on the right side, the left side has doors and things like that. So it's a very valuable business, and I wish I would have bought this 10 years ago because or even 15 years ago. My brother actually buys cars from Coparts, and he's very handy and he loves working on cars. And he'll buy two cars, like two Mustangs, one that was hit from the front and it was totaled, one that was hit from the back and it was totaled. And then he'll take the parts and combine them and make one car with a salvage title. And then with the extra parts, he'll sell them on eBay or other places, and then have a new car for a whole lot less than other people would pay for a new car. And through that hobby, he's gotten to work with his son, and teach his son how to weld, how to work on the body, how to do mechanic stuff. So his son will have a skill that will take him far. If he ever needs to work on his car, he knows how to do that from working on it with his dad. And as far as hobbies go, working on cars versus playing video games or going to the racetrack or getting drunk in a bar, it's a pretty healthy hobby. So anyway, a great long-term compounder. And why has it, what's causing it to come down recently? Well, the founder stepped down and it's being run by the heirs, which is fine. But most of the reason it's been cut almost in half is fears about things like self-driving cars and AI and electric vehicles. So if you total an internal combustion engine, as I said, the things like the engine and transmission are very valuable, but EV cars have fewer parts that you can salvage, and so there might be less things that they can use, and also they just tend to be zeroed out. People don't take EV vehicles and restore them. They tend to just get rid of them when they're damaged, because a lot of it is technology like the battery, which is not something that people like to buy used, and a lot of it is technology like computer stuff. And the other big fear is self-driving cars. So the New York Times recently did a study where they looked at Waymo's data and found that self-driving cars have fewer accidents, kill fewer people, injure fewer people than human drivers by a huge margin. And that number is only going to go up. Even if the technology doesn't get better, which it probably will, but even if it doesn't get better, the more self-driving cars that are out there, the fewer drivers there are, so the fewer accidents there'll be. And if there are fewer accidents, there are fewer cars getting totaled, fewer cars going to Copart, and that's the concern. I don't think it's as big a concern as people think. They do have a lot of valuable real estate, not nearly as much as other companies like U-Haul, but that gives it some terminal value. But I think the main thing is that even if starting today every car on the road was a self-driving car, cars stay on the road on average 10 years. So even if starting today every car was a self-driving car, it would still take more than 10 years to get the existing cars off the road. But every car starting today is not a self-driving car. There are still being produced normal internal combustion engines that are driven by humans. The majority of cars out there are that. So we will slowly transition to EVs and self-driving cars, but that's going to take a while. And as I said, even if it started today, it would still take 10 years where this company is going to be around and can do things like buy shares, sell off their junkyards and things like that. And they've proven to be very savvy operators. They own their junkyards, so they have a great advantage over their number one competitors, which is called Ritchie Brothers. And that company has been rolling up or opening junkyards, but they don't own the land that it's on. And so they have higher costs and are sort of vulnerable to inflation, which Copart isn't because they own the dirt. Copart is expanding into Europe. So even if you think they're saturated here, there's more growth ahead. So at 23 times earnings, I feel okay with this, and I'm slowly building a position. And I don't like to go all in at once, because if I buy a lot and then the stock price drops, that's happened to me before, and then you're sort of out of ammo because you decided this is how much of a position I want to have, and then you bought that much, and then it went down, and then do you want to devote more to that? But if you buy slowly, you can sort of dollar cost in, and if the price runs away from you, you don't have to buy more, but you at least you had something, and it's sort of like schmuck insurance. So anyway, that's my thought on Copart. Let me know what you think. Are you looking at this one? What do you like? What do you not like? And put comments below for other companies you'd like to see. And if you want to support the channel, there's a Buy Me a Coffee link or a link to sign up for Robinhood. And yeah, that's it for today. Have a great day, everyone.